Welcome back, traders. Let's have a quick update on what is happening with that British pound Canadian dollar trade that we placed last week. And then we're going to be looking at a new potential entry coming up on the Euro New Zealand dollar. It'll probably be quite another nice big one. So let's look at this pound Canadian dollar, the pound loonie. What we did is that we entered at about this level here. And we saw that it went into some profits, and then if you remember correctly, we moved the stop loss up into a break-even position. So we were saying, alright, this is fantastic, we've already made some money, but I want to walk away for a while. So with the break-even position, you know, at most we would lose like a buck or two. It's really nothing serious at all, so we'd call that a riskless trade. But now we've been watching that the market has been going up and up and up the whole time, and we're still holding this trade. We're currently in 235 pips profit, which is a fair trade. Even on the 4-hour charts, you know, I would consider this a successful trade already. We could go ahead and close it, but let's say you're greedy and you want to squeeze a little bit more money out of it. I've just followed something very similar on my live account, so I'll show you here on the demo account what we're doing. We entered for a very small size. This is just to show you what somebody with a very small account would see. By entering a 0.02, we're entering for a minute amount of the market, but we could even split this further. And this is called splitting the trade. We do discuss it in the online course. In fact, this video will be added to the online course as a follow-up to that. So let's have a look at how this works. The first thing we want to do is we want to cash in half of the profit that we've made. This moves it into our account history, that money becomes ours, you know, that's it, they can't touch it, but we still want to remain in the trade and see if we can get some more out of it. So what we can do is you highlight the trade here and you double click, and it'll bring up the trade window. If you were to click close immediately, it's telling you that you are going to be closing 0.02, which is the full position that we're currently in, but what you can do is drop the volume. So now I'm going to select 0.01, which is half of our current position, and I'm going to go ahead and close that trade. Now we've banked half of the money that we could have made if we closed the whole thing, so that's in, that's ours, done, no one can touch it. And the next thing to do is to see that, well, you know, the market has been moving steadily up. At what point do we feel like the market would be turning down? The one is that we can wait for it to hit this top line and then see if a candle is going to push it all the way down. The other is that the market is following how we expect it to. You know, where you have a biggish up and then a small down, a bigger up and a small down, and it's almost like steps going up. So as soon as one of these steps is broken, then it looks like the market might be changing direction. So let's move our stop loss up to this point here. Now, stop loss does not always mean that it stops your loss, because in this case, even if this stop loss gets triggered, we're now in profit of about at least 140 pips. So even if the market does reverse and it starts tumbling all the way down, it's going to close here and our trade will still walk off with 140 pips profit. So this allows us to bank some money now, make sure that no matter what happens we still make some money of what the trade's happening, but it also allows us to remain in the trade with having absolutely no risk at all, because, well, you can't lose money on this trade now, and that's where you want to be. So every now and then we're just going to check in on this and see if it's still moving in the right direction. If some amazing news comes out, then we may reconsider our position. We do have a short pin bar that's formed, and it does appear to be forming off an important line, so let's just pop in that horizontal. And we can see here that we did have some resistance here not so long ago, and if we look at the daily and zoom out, we may see some other points. That's a little bit far for us to be worried about. Okay, so that's quite far back into history. We don't need to go that far for this, but we are a little bit nervous because this does look like a short positioning opening, but we're fine because our stop loss will give us profit and we've already banked half our cash. Let's have a look at the potential entry coming up. It's on the Euro New Zealand dollar. Now I've left everything off on this chart. You'll see here it's just my typical blank chart. I'm on the 4-hour and I'm going to zoom out a lot so we can see the bigger picture here, and I will draw in the lines. We are seeing an ascending trend line forming here on both the highs and the lows. Let's have a look here. If we start at this point, because we can see that the market reversed off this position, continued down, so this is an important point. Same thing happened here, although it was a bit fuzzy, and then on the far right it looks like it's happening again. So we can see that these line up reasonably well. Let me just move that to the right spots. There we go. And that's hitting. And then this area, yes, it was a bit fuzzy, it did break through, but it is still close enough for us to look at this. And we also see one on the lows starting over here. So we start on that point and we line it up to the most recent reversal, and we see we have the same kind of fuzzy thing, but there is definitely a reversal. And we can see that these lines are almost completely parallel to each other. So this would be an ascending trend that you're looking at, or an ascending channel, because of the fact that we have both the lows and the highs that are nearly parallel. And now let's have a closer look and we can talk through it. So we see that the market has been coming down, hitting, coming up, hitting, and it's trading within this range, generally moving on. Now this is going to open us up for a potential buy to continue with the channel, but that can only happen when the market comes down and then bounces off. And we can see, even the new traders will see that that could take a very long time for that to happen. So we could look at potential entries, trading it on the way down, depending on how far that is. So let's say we get a short entry coming here and we'd expect to come down. We can see, well, that's over 400 pips. That's plenty of room for us to trade inside. If it was, say, down here, for example, and then we're only looking at, like, how much is that? 100 pips? 100 pips on the 4 hour, you know, that's a bit risky. You wouldn't really want to look at that. But certainly 400 pips, there's a lot of room that you can play in, and you could trade that down and make quite a few good trades off of that. But now we need to find these points where they can possibly happen. And so we go back to my tool, which I have a love and hate relationship with, the Fibonacci. And what we do is that we look at the most recent run, which is this over here, from this low up to this high, which has been a turning point. And we draw in the fib lines like this. Now I'm not going to draw them all the way across. I'd prefer to pull it backwards just so it doesn't take up too much space. There we go. Now we can use these fib lines to see if the market is going to come and bounce directly off it. Yes, this candle here looks like it's coming directly off, but this is a continuation of a downtrend already happening. So we would need to see the market come down, turn up a little bit, give us some kind of indication, and then continue to trade short. Alternatively, we may get some indication that it's going to bounce off one of these lines and continue with the bullish movement. So unfortunately, this is a sit and wait game. However, another thing that you can do is you can compare it, and let me just open up another copy of that chart. And I'm going to have a look at our crossover strategy here on the 4 hour. And then we can see if there's something coming up here which can confirm. So you could look and say watch this one here and wait for a buy signal, because remember the crossover strategy, you always trade in the direction of the bigger trend. And we can see that from this chart here, the bigger trend is definitely bullish, so we would want to stick with bullish movements. And this may give us a few entries. So we can see that the market is turning down now, and that's great. That's what we want, because we can only enter on this strategy when the market is turning up, which means it has to have recently come down first. And that's what we can do. Alright, so I'm very happy with the way this one is going. This candle is making me feel quite nervous. It does seem like an important line, but in interest of learning, I'm staying in, and my live account I'm staying in as well, because I've already cashed in quite a bit of money off that. And the remaining position will still give me, you know, enough for a good weekend away. Then if we have a quick look at what's happening in Australia versus the Canadian dollar, we can see that this triangle that has been squeezing the market, it looks like it is breaking out at this point, but we haven't seen a significant breakout. In fact, we've got a long pin bar which seems to be pushing it back inside here. So let's have a look and see if that pin bar, I'm going to put a horizontal line there. And we're going to see if this is off an important level. It doesn't appear to be. And this is already back in 2012, so that's more than far enough. So no, while that pin bar does exist on the daily, It doesn't seem to be coming off any important lines, so I don't know how much we really trust that, but it does seem to be pushing it back inside. So once again, we're sitting and waiting. This is not a confirmed breakout. There's nothing massive coming here. If we get a short coming off this line here, off this horizontal, then we would likely trade it down. But it doesn't look like that's happening anytime soon. So we're just going to check in on this every now and then and wait for something to happen. The pound Canadian, I'm quite proud of this trade. It's doing very nicely. Euro New Zealand dollar, we're going to be checking in and waiting for something to happen there. And if you are looking for extra entries, you can sit and watch on this one as well.